Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right, everybody, welcome back to another one. Good to have you back here on this lovely Friday. We've got markets moving. It was a pretty crazy week. All things said and done, we had a big FOMC meeting, which was highly interesting. And then, of course, we had everything going on in the Middle East, which caused quite a bit of volatility across a lot of different assets. We have indices up here today. Take a look at the NASDAQ charging back higher here. And just as we've been saying on the show here, a stone's throw away from those all-time highs. NASDAQ looks strong. S&P 500 looks strong. The Dow Jones also bouncing back nicely. And the Russell looks great. I'm still long the Russell. This is a trade that I'm personally in. And continuing to hold on to this one. We'll see if we can get a push across the indices through their recent highs. Now, if you're looking at the NASDAQ, this is going to look slightly different. We're pretty close to, sort of that breakaway move. But I do think that the path of least resistance, as I've been talking about on this show recently here, has been and still is, in my view, a push for those fresh all-time highs. I do think that is likely coming down the pipeline. So yeah, we will see what comes next. A couple reasons behind that. Why do I think that the indices have the potential to put in those fresh all-time highs? Well, here's a couple reasons. First one is just pure momentum, right? This market clearly wants to push higher. I had a really interesting conversation that I want to tell you guys about yesterday. I went to a dinner event yesterday. I had a conversation with a gentleman there, a friend of mine there, and we talked a little bit about what all kind of took place. And I love doing this. I go to social gatherings and events and things like that, and it's always interesting for me to just get a context of like people who are not, kind of insane like me, who stare at this stuff 24/7, just to see what their take was on this. And what I can tell you is that who did really well in this sell-off? It might surprise you. It was actually retail traders. A lot of retail traders did phenomenally well in this crazy sell-off. I want to talk a little bit more about that in just a bit. But before I get into that, why do I think the indices have more room to push higher? Now, by the way, not all retail traders did well in this, but a lot of traders, a lot of everyday people actually did really well in this market sell-off. So big push, right? Why do I think that could happen? Well, this morning we got a announcement from Fed Waller, who is a notable, part of the Fed there, and he actually thinks that July rate cuts could be in order. So you have Powell, who has been sort of very hawkish here recently, but the consensus is not, to be uber hawkish and no rate cuts. There is a rising group of Fed officials and even just commentators across the financial lexicon, if you will, that think that rate cuts are more and more appropriate. We've talked about this a lot. I spoke about this at length yesterday, just about how I think that you're seeing Some economic data here that really suggests rate cuts are the appropriate next move from the Federal Reserve. Take a look at our economic surprise meter. When we look across the currencies, you can see that the US and Australia are getting some very low scores. Now, what this means is that the US, on most of its economic prints, has some weakening, some slowdown in the economy occurring right now. Now, we could extrapolate that further and we could go down into the weeds for a second. But before I do, let me just draw some cool attention. If you have the EdgeFinder, you might be excited to see this new feature here. We've been talking about it on the show. I've been so adamantly excited to have this ready to go. But we now have the average economic surprise score down here. What does that mean? Long story short, this gauge right here takes into consideration the 8 major economies, and it generates an average of how strong or weak each one, or the collective, if you will, is performing. Now, one thing that's to note here is that this is actually equally weighted, right? So we're not going to weight US, even though the US economy is very important. These are actually equally weighted. So Japan has the same weighting as Australia, has the same weighting as the US, is the same, and they're all contributing to our average economic surprise meter. Now, why would this be useful? Who is this useful to the most? You ready? If you trade gold, this was built specifically for you. Now, it's useful across a long list of things, but why is this so specifically useful to gold traders? I'll tell you why. Because if this chart, if this average reading here is stronger, that would suggest a risk on type of environment, or just in general, it would suggest the economies of the world look pretty good. Whereas if this thing is lower, the economies of the world are collectively looking a little bit soft. So why does that impact gold traders? Well, even if you are a new fundamental trader, or just getting the grips on the idea of fundamental analysis, you know that gold thrives in an environment where the economies of the world are weakening and people are scared and people want to rush to that safety, and vice versa. So right now, we're getting a 56% reading that is neither super strong nor super weak. You have some economies that are upbeat, like New Zealand, UK, Europe, Canadian currency showing some strength here. And then you have some that have been recently downbeat compared to expectations. And so what you get in the finality of that, I'm not sure if that's a word, but the final average is something that I've really been wanting to see in the EdgeFinder for a long time, and we finally got it. So this is a new feature that I think is super useful. Even if you don't have a copy of the EdgeFinder, I'll be referencing this periodically, and hopefully that will help give some context to what we're looking at. So, but it gets better, guys. You know, we can't just drop just for currencies, because we have lots of people who like indices. So we built the same thing. You've never seen somebody get so excited about data. For stocks, stock market indices, we now have a stock surprise meter as well. This is showing us a list of the major stock markets associated to our major 8 major currencies: the New Zealand stock market, the FTSE, the DAX, the Nikkei, the Australian stock market, the SP500, right? So we've got a list here basing it off of our economic data, and you can see which ones are looking strong versus weak. And then you can get the average for the stock market set. Pretty cool. I'm excited. I've got a video that's being done on this subject, or I filmed it. It's going to be edited and put up in the coming days. But when we talk about the indices, right, we're kind of getting a neutral score when it comes to the economic data. There, of course, is other things beyond just the economic data to consider. But yeah, we're excited about this. Amazing update, Nick. Thank you for all the hard work. You're very welcome. If you have a copy of the EdgeFinder, this is free to you. You don't pay anything. If you already have access to the EdgeFinder, this is a free update. Enjoy it. Let us know what you do like, what you don't like. We do listen very closely to customer feedback all the time about the tool and how we can continuously improve it to make this the go-to household tool for serious fundamental analysis traders. Okay. And yes, if you would like to try out the EdgeFinder, here is a link to where you can fill this out for information on how you can access the tool for a 30-day trial. If you'd like some information, click that link and we will send you all the info on how our trials work. All right, so let's jump into some more charts here. With that in mind, gold is getting a bullish rating. And why do I like gold in terms of a possible buy? Well, let's break it down. When we see gold getting a plus 10 score, what is that all about? Well, the commitment of traders data plays a big role here. Institutional money is super bullish on gold. Retail money seems a little neutral on gold. Seasonality suggests upside for gold during this time, and trend. So these are non-economic data points, right? So this is our non-economic stuff. And then we have all the economic data down here. Economic data slightly suggests bullishness for gold, but this is really where we're getting a lot of our scoring points. So so what we've got here is we've got a strong reading on gold. For me, what this would mean, and I get this question all the time, I have another video coming out on this. How do I actually trade with the EdgeFinder? Well, I'll show you in a high level. So we have a bullish rating on EdgeFinder, right? So the way I use it personally is I use the daily chart. Some traders use the 1 hour, the 15-minute. Time frame is not specific. The EdgeFinder is not built for a specific time frame. But if I can get a pullback down to this 3,300 area of support, this to me looks like an opportunity to start getting in long on gold. I'd put a stop below structure. So if this thing comes down into this area, I'm going to probably get long around this area as long as the EdgeFinder still has that score with a stop loss below this 3250 level. So that is a trade idea that I have currently. I'd like to get long gold if we do see some further pullback today. I do think that the momentum here for gold this year still looks good. We've just moved sideways for a couple months, and I actually think that that's not necessarily bullish or bearish. In fact, I think that if you're consolidating near highs, that's actually a bullish thing. As long as the fundamentals and the economic score still, or the EdgeFinder overall score still suggests more upside, I'll look for a technical entry, put a stop on the trade, and manage risk accordingly. So I like gold to the upside, and I'm watching this one personally. I'm still long the Russell. Things have been going really well. I've been surviving. My trailing stop did not get hit. And so now we've got stocks making a move higher here today. And I do think, as I mentioned at the top of this show, that I think indices have more upside to go. I think that we should see a continued push beyond this level. And actually for the Russell, I do think it's possible that we could get, all-time highs being hit in the coming year or so for the Russell. So we'll see. VIX is down 13% here today. Big drop off following, everything that occurred yesterday with the FOMC press conference on Wednesday. We saw on Thursday. You're now seeing a little bit of hopefulness in terms of what's happening in the Middle East, but I wouldn't get too ahead of ourselves there either, because oil prices are still suggesting, things are highly uneasy there. So we'll see how things develop on that side. So we'll see. Silver also looks good if we can get a pullback. I personally like the idea of a 3450 retest on silver being an area where I'm probably looking to get long on this one. I believe this is also a very bullish setup within the EdgeFinder. Let me just pull up silver. Yep, so we're getting a +9 on silver. So this would also be a strong setup for me. If we can get a pullback to the 50% retracement, that is a previous all-time high, key level of past resistance that I think could turn support. But what I say often on the show, I don't read too far into technical analysis. I keep it really, really simple. And I mostly use technical analysis, not as a predictive tool, but as a risk management tool. So what I mean by that is that, I don't actually think that there is, and there are people who have differing thoughts on this. Obviously, with everything in trading, there are differing thoughts. But my opinion is that if you have a price level like this 50% retracement happen, and we set this up, I don't think that this chart is, massively predicting. It's not telling me, the price action is not predicting that it's going to go skyrocketing higher. If anything, it would be the fundamentals, the flow of markets, right? The true reasons markets go up or down are based on fundamental analysis. So the fundamentals are what actually guide direction, why I think silver could continue to push higher. Now, do I know that silver is going to push higher? Nope. but I don't have to. Trading, as I always say, is educated guesswork. It is not certainties. So we're mapping out the fundamentals, we're mapping out the sentiment. But the technicals, what role does technical analysis play in all of my stuff? The answer is it's the least of the three. Fundamentals and sentiment are more important to me than technicals. Why? Everybody you know trades based on technical analysis, and everyone's so excited about technical analysis all over YouTube. Why am I not super enthralled in getting super fancy? Well, because Lee put it perfectly, fundamentals are the wind in the sails of our ships here we're trying to sail on, right? At the end of the day, fundamental analysis is why stuff is moving or why it should continue to move in a particular direction. Technicals are just a reflection of what's happening on the fundamentals in my view, and that's my framework for how I use them. So what role? Is it just useless? No, that's not at all what I'm saying here. Technical analysis is useful, but for not the way that 99% of retail traders use it. I don't use it to predict that in this exact moment, at this exact level, price is going to pinpoint. And I'm going to go on Instagram, screen record it, put cool music over it, and call myself a sniper trader, right? That's not what we're doing here. The technical analysis component to what I do is simply a risk management framework or tool set. So I think generally silver can continue to move higher. I like the idea that sentiment getting a little bit more bearish offers, in my view, a better risk to reward scenario. I like the fundamental story. I think fundamentals suggest most likely silver continues to rise in the coming days, weeks, months. And so then I'm using this technical area of support to map out my risk to reward. Now think about that word, because most traders kind of just hear, oh, risk to reward. Yeah, I've got a stop loss. But think about what we're actually saying when you say risk to reward. You're saying the risk that I'm wrong could happen versus the reward that I think will happen. What is that, right? So operating under the idea that this is just a educated guess and that we could be wrong and whatever, or we could be right and we could capitalize big. That's what I use technical analysis for. I use it as a simple red light, green light, green light. At this level, I'd give it a shot. If it doesn't work, red light, stop out. If it works, great, green light, I'll let the trade try and run it. Does that make sense? If that concept of technical analysis made sense, do me a favor and just drop a 1 or a yes in the chat. What I'm trying to say is that technical analysis is, in my opinion, it is useful. Just like a great stock can be overvalued, though, or a great company can be overvalued, technical analysis, in my opinion, in the retail trading space is heavily overvalued. Now, I'm not saying it's useless. I use it. I have a tool set. It's part of my tool set, but it is not the end all be all that I think the vast majority of the retail trading space thinks that it is. Again, it's kind of I don't know if anybody resonates this, but for me, technical analysis actually was a really dangerous trap that I spent a lot of time obsessing about. Because for a long time, what I want to do is I was like, I just want a simple technical entry that I don't want to think about, fundamentals. I don't want to think about sentiment. I don't want to think about any of that. I just want a pattern that's going to tell me when the market's going to go up or down. And if you are like me and you feel the same way about technical analysis and you've been disappointed by it, what you've probably come to realize or are in the process of realizing about technical analysis is it is not an excellent predictor of future price movements. It's one tool within a tool set of trying to make market predictions. Let's see. Oil prices still remaining elevated. Gold prices pretty down here this morning. In terms of escalation in the Middle East, I saw a question from that in the audience. Yeah, so here's the thing. If the market sees something that is, this is the way geopolitical stuff is a bit difficult to trade, right? By the time you and I hear about something, usually the market's already up. And for you to make a call that you think things are going to get worse over there, that's the call that you have to make, right? So what I mean by that is that if you see gold shoot up on something escalating in the Middle East. If that happens, by the time you and I hear about it, the price has already made a big move. And you are, by buying that, if you are buying there, you are making the bet that from here, things are going to get substantially worse than they already are. The market's already saying it's going to get really bad out there. That's what the market's saying. You're saying by buying after that, that you think it's going to get even worse, that you're going to get like borderline World War III stuff. Could it happen? Hopefully not. Like we all probably would rather not do that. But if you are buying gold or oil at the tops of those rips, what you're saying is that something bigger is even coming from here. That's sort of the game that you're playing if you're trying to buy oil prices at these levels. Now you might think that, but for me personally, I don't have an edge in trying to call what's going to happen next in geopolitical stuff. So for me, it's like, okay, geopolitical risk, while it could be there, if I'm going to include that at all in my calculus behind trades that I'm taking, it would have to be on a pullback, after, kind of the sentiment has calmed down a little bit. So I talked about that yesterday a lot when I talked about oil. I do like the idea of getting some long exposure as a bit of a hedge, but I liked oil from a demand side factor anyways before all this geopolitical stuff. So to me, I'd be interested in taking a look at oil around the 71 level. And I'd also be interested at looking at it at the 64 level as a pullback possible trades, right? So maybe a stab here. If it doesn't work, try 64. That would be probably my approach to this. Nick, I don't know if you're aware, but Israel's stock market and Iran's stock market are at all-time highs. I don't know the ticker symbol for Iran's stock market. I know Israel's ETF. I can't remember the EIS. That's it. Yeah, EIS is up and away here. It's a weird thing, right? It is a very, very weird thing to see that sort of thing, but you also see that across most markets right now. A lot of markets are like, take a look at like the DAX, for example. DAX is not too far off from its all-time highs. Take a look here. You've got the Russell is far away from its all-time highs, but then look at like the NASDAQ, look at the S&P 500. It could be a very weird thing to see stock markets rallying in the face of something geopolitical like that. But in a weird way, it's actually not uncommon to see that happening. It's not that the market is just ignoring the war, right? It's not the thing is, as touchy of a subject as that is, you have to actually ask, does that circumstance dramatically put at risk the earnings and profit potentials of the companies that are in the underlying index? So it sounds almost insensitive to what's happening, which is a horrible, scary circumstance. But at the end of the day, does NVIDIA dramatically have a much higher risk of selling significantly less chips because there's something going on in the Middle East? The answer is probably not. And that's the weird kind of world that we live in, where, it almost seems like NVIDIA just ignores what's happening in the Middle East, but it's ignoring it because most likely, a very, very high probability, what's happening in the Middle East is not going to dramatically cut profit outlooks for NVIDIA. And so that's where it can be a little confusing, but you just have to remember, what is an index? An index is a basket of stocks. Do those stocks, which represent companies, have big risk from what's happening there? Some do, right? There are certain stocks that are way more sensitive to something like that. Think aerospace and defense companies and, that sort of thing. Those can be seriously, or flight companies like Delta Airlines, right? Airlines. Those things can be substantially impacted by what's going on. But an NVIDIA or a Google or a Microsoft or an Apple may not be necessarily as directly impacted by what's happening there. So I do like the idea, I mentioned it earlier, of potentially picking up some long exposure to gold and oil. But what I've been kind of discussing here is that there are certainly risks in the Middle East. but I can't predict what's going to happen there. But what I can make a decision based on, or an educated guess based on, is the economic data, which I think generally suggests couple things with the economic data here. Recently, we talked about our economic surprise meter here, suggesting for like the US that a lot of our economic metrics are pretty soft right now in the United States. We have cooling inflation, cooling PMIs, cooling jobs data. To me, it seems like it's a ripe opportunity for the Fed to cut rates. And so I do think that while Powell came out pretty hawkish here, I think that tone has the potential to shift. And so it's a bit contrarian to the Fed chairman's words. But I think that like there was Waller this morning. Waller came out and said that he thinks that July could actually be a rate cut month. Now, of course, Waller is a well-known dove when it comes to the Fed crew, but it still goes to show that there is a division in terms of thought, in terms of when rate cuts could occur. And if the data keeps coming in soft, it's happened before and it can happen again. Powell can change his tone and do so and just say, hey, you know what? Data suggesting something else, and in which case I think gold would rip. So I do like the idea of getting long gold, but I would have to have a pullback to this 3,300 level. Yeah. So the other thing, so a missile fell on the Microsoft building. So like obviously terrible stuff, scary stuff happening across the Middle East. And this is just, again, what is confusing here is you say terrible stuff, and then yet Microsoft's actually going up this morning. So it's not that the markets, what many people will do in that regards is they'll say, well, the markets are corrupt and manipulated, and that's why they're going up. But again, does that circumstance dramatically destroy future earnings growth for Microsoft? And the answer is no. For the market's telling you it thinks no. And you might disagree. You might say yes, it can ruin it and it can sour things. But the market is telling you, and the market's pretty dang smart. The market is pretty dang smart most of the time. It's telling you this doesn't stop Microsoft. This doesn't do stuff like that. Indices continuing to push higher here this morning. You've got the S&P 500 up 1.5%, bouncing back sharply from the sell-off that we saw on yesterday, and then NASDAQ, same thing, up 1.8%. What a rip here. Stocks opening in 1 minute. We'll see if they can hold those gains or if they're going to give back some of those today. Ball, I was just trying to make the point that, again, it's very confusing. I remember being early in my trading and investing career being so confused about like how can horrible things be happening in the world and how can the indices be going up? But it's just in the capitalism world that we live in for American stocks, it's just about profits and revenues. Like, are they still going to rise? If so, stocks are probably going to move higher. Yes, the geopolitical stuff is terrifying and it's horrible, and any loss of life is something we absolutely do not celebrate. But that's not what the stock market's saying. That's where I think the confusion comes from, is people think, how can it go up? It's like profiting from war. Well, it's not so much that. It's just, does it actually seriously impede the growth of these companies? Now, if you had one rate cut projection this year, the market would be moving lower. But we got two in the dot plot yesterday. So we got some expectations that the Fed's going to cut rates, or some confirmation, I suppose, that rate cuts are coming most likely this year. So we'll see. It's not rising in the because of what's happening there. It's rising despite what's happening there, if that makes sense. It's rising because that's not the number one thing that drives stocks all the time. Now, if there was some sort of more global escalation or some expectation that the United States was going to dramatically get involved, or that, supplies of oil were hit so hard that the price of oil shot through like 80s, then yes, it would start to get the attention of the stock market, most likely. Right? But this oil price, $75 a barrel, is something that we've been kind of working with for the last few years. So we're not in, even though we've had a really dramatic rise in the price of oil, this is not like mission critical levels of oil. If you start getting up into the hundreds, stock market's going to freak out, because then it's like, oh, we're going to get serious inflation, and that's going to completely kill that prospect of rate cuts. But we're kind of just bouncing back from a very low point into kind of a multi-year average level. So does this massively disrupt the inflation story at these current levels? I would say no. But if it worsens dramatically from here, then the circumstance changes for, markets. Japanese yen's moving lower here this morning. Dollar index still flat, just sitting here at support. Oil prices slightly lower here this morning. Bitcoin pushing higher. Ethereum slightly higher as well. 10-year yield still just chopping about. Stock market just opened up, by the way. New Zealand yen, Aussie yen. So some of our yen crosses advancing higher here. Look at pound yen. Nice move there. Euro yen also pushing higher. Euro dollar looking decently strong. Pound dollar also. Euro pound, I have two small short positions on this one. Seeing if we can get a rollover around these areas. CAD Swiss still in this one. Pretty flat. Just no movement for the last, but this is fine. I'm collecting some positive swaps on that trade, so we'll keep an eye on that one. Gold out of here in the, look at that, from 9 a.m. starting to rip here on gold. We'll see if that can find some legs here to it. Here's the S&P 500 on a 5-minute chart this morning. Trading flat so far to the open, but up from this morning. What indicator you use to mark supply and demand zones? It's not an indicator. I just draw these. They're just rectangles. In terms of currency stuff, generally speaking, still feeling more bullish on things like the New Zealand dollar, the British pound, the Canadian dollar, and the euro. Things I'm feeling more bearish on would be the Swiss franc, the Australian dollar, and the US dollar, and just pretty neutral on the Japanese yen at this time. I do have long positions on NZD versus JPY. I also have a short position on euro versus British pound. I also have a long position CAD versus Swiss franc. So I'm trading a basket of different currency pairs this time. And this is pretty much my go-to right now for getting a pulse check on currencies. Of course, the top setups page filters all the same data and generates bullish and bearish biases for different things. I'm watching for possible pullbacks on the euro dollar. I'm also watching for pullbacks on gold, watching for pullbacks on the long side for silver. CAD yen is really interesting. I already have CAD yen, so I'm not, or CAD Swiss, but CAD yen looks really strong. Somebody pointed out this chart. Let's see, how did that CAD yen move play work out? Yeah, so we had this like breakout through these highs and pulling back into this area. I would not be surprised to see CAD yen catch a little bit more upside in the coming weeks. Things seem to be slightly leaning more risk on. We can check that sentiment by going to our Bitcoin to gold ratio here. And you can see, yeah, we're coming right back into neutral territory. So what we do on this channel, we talk about this often, the Bitcoin versus gold ratio. When it's trending up, we call this a risk on environment. When it's trending down, we call it more of a risk off environment. And you can see we are at a potential breaking point where we actually could go back into a risk on environment. Of course, during the March and April stuff, this was an excellent indicator of risk off before the big sell-off stuff. And then when we ripped and turned around, this was a wonderful indication to be a little bit more risk on. So I do keep an eye on our Bitcoin to gold ratio. Let's take a look at our AAII investor sentiment survey. We can see things are still a little bit more leaning bearish. The crowd sentiment staying 41.4% bearish on stocks, 33.2% bullish on stocks, and 25.4% of respondents saying they feel neutral on stocks. Now, this is a really useful indicator for risk on versus risk off sentiment based on the crowd. I do take it as more of a contrarian indicator, as take a look at how everybody got super bearish right at the bottom of the move for most risk on markets. So really interesting to keep an eye on that. Put to call ratio is another one we should just keep an eye on. Check this out. Crowd sentiment got scared again. We see a big spike up in the put to call ratio, reaching extreme fear levels. To me, what this would signal is that if you get further downside in stocks or indices, we could also look at other things, of course. We could take a look at the NASDAQ. We could take a look at silver, right? We can take a look at gold and just keep an eye on the balance of calls versus puts here. So gold's kind of in neutral territory. DAX here, we could take a look at Bitcoin. This one's still a new one here for us. This is using the IBIT ETF. Oil, for example, everybody's been super, super bullish on oil as a bit of a risk off move, a little fear factor here playing into it. So we'll see. But yeah, I do like the idea of potentially watching for some sentiment-based trade setups today and on Monday. So I'll keep a close eye on all of that stuff that we just got done discussing. And of course, all of these things are being automatically factored in the top setups algorithm. So pretty much every Sunday and well, every day of the week, I'm keeping an eye on this list of setups that are considering sentiment, technical, and economic data. By the way, if you're interested in trying out the EdgeFinder, we'll drop a link here in the chat to where you can apply for a 30-day trial. If that's something that you're interested in, we'll drop a link here in the chat to where you can fill out this quick form, letting us know that you'd like some information about how our trials function. So there it is, the EdgeFinder trial link in the chat. Also, quick plug too, we have another free thing for you. If you're interested in joining our Telegram channel, then I highly recommend it. We're up in the game on Telegram to another level here. Recently, we've got Alan Perez. Many of you guys know Alan. He's also been helping us with what's going on in the Telegram channel. He's been posting charts, talking about mostly currency pairs, which is great because it balances out a little bit of my coverage of more heavy on the indices and commodities. But he's posting all sorts of stuff with us. We have a couple people who manage this Telegram channel collectively. We're posting economic data. We're posting chart markups, trade ideas, fundamental analysis, technical analysis. It's completely free to join. So if you're not already in the Telegram, take a second, click this link here. If you're watching the stream at a later time, I know a lot of people watch the recordings later. There should be a link for you in the description of this live stream. And take advantage. It's completely free to join. I think we just hit 40,000. Yeah, we hit 40,000 subscribers here recently, which is awesome. Goal in the Telegram channel, just like on the YouTube channel, is to continuously offer free value to people who enjoy the stuff. Quick look at stocks. I don't know if you guys saw this, but Coinbase was up massively. Announcement of some stable coins. There was some government something passed that was positive for cryptocurrency. The stable coins world did really well. Tesla's up here today. Apple's up. Uber, PayPal, Walmart, Salesforce, Fortinet, Intuitive Surgical. Robinhood's down just slightly here today. This thing's been an absolute beast. This is my best stock of the year. I'd say my worst stock of the year has actually been Apple. I bought a little bit of Apple. Actually, no, my worst one might be PayPal. But I've had like pretty much everything that I bought in the April lows has been doing really well. I don't have any like major losers. Not to say that they didn't look ugly when everything was selling off, but we've had a really strong bounce back across pretty much everything, which has been awesome. So shout out and congrats to anybody who, caught the the buy the dip opportunity of April. Anyways, I spoke about this earlier, so let me do this really quick. I went to a dinner event yesterday and talked to someone there who had an awesome story. He essentially, we had spoken months back, just hanging out, and we talked a little bit about, what I do, right? The trading and investing and stuff like that. Well, he mentioned that he actually ended up, he works at a private equity firm, and everybody in the private equity world that he was working at was terrified during this time. And he personally told me that he bought a bunch of stuff, and he even bought some like call options on stocks that he liked. And he said that he has done phenomenally since that period. Now, the reason I bring that up is that I think it tells the story of what we saw happen in the March and April sell-off. Now, I am not going to act like everyone made money during this time. It was, for a lot of people, it was a really devastating period of time, and I get that. But on average, the winner in all this might surprise you. The winner in all this was actually the retail trader. There was a whole bunch of reporting data that there was big inflows into stocks at the brokerage houses. Robinhood, they and these various brokerages put out data on the retail clients that they have, and they bought the dip. Meanwhile, you know who sold? Private equity firms, hedge funds, pension funds, wealth management groups. Because I want to talk about why that is. Why did the retail trader just win big in this? And again, not everybody did. I'm just saying, on average, the data flows suggested that retail, the crowd, bought the heck out of the dip and actually did really well in all this in terms of the stock market. Now, the reason is, I think, is because hedge funds and pension funds and private equity and all these firms and businesses that do this professionally, they can't be taking crazy risk. When you have tariff announcements and you have, hey, everything looks terrible, and this could completely disrupt everything. For valuations, we could enter into a multi-year recession. All those things start to flare up at once. Institutions, they don't play that game. They're managing people's money. They have this responsibility of being like, I need to shut out and close down and de-risk and get out of the way of what might be coming. Retail traders don't have that financial responsibility. Now, that can hurt them because sometimes they make stupid decisions, but they don't have the obligation to de-risk when markets start to panic. And where that favors the retail traders is one of the biggest edges that I think retail traders have, is that when you get these massive sell-off, capitulation, doomsday events, retail traders have the ability to say, I can take some calculated risk here. Whereas many hedge funds have obligations when they're managing other people's money. They do not want to get caught blowing up client money. So they have to de-risk. And so there's a huge advantage here to the retail trader, who this fundamentally I do not see changing. This is why when it comes to sharp market dips, I almost always find stuff to buy. Now, I don't buy everything. I buy specific stocks and indices and look for trades that I like, that I think have great potential. I'm still selective. I'm not an idiot with it. But I think calculated risk during these times is a massive edge, a massive advantage that the retail trader over the last multiple years has had the luxury of being able to do, that financial professionals do not have the luxury of doing. The wealth management groups, all those groups, right? They have to protect risk. When it comes to the average investor, the average trader, the weekly inflows were incredible, right? So there was this huge surge in retail buying the dip. They were buying stocks like Tesla. They were buying stocks like Nvidia, right? Buying stocks like Meta. The crowd, the little guy, actually did the best in this recent sell-off. Just something to think about, right? Now, that's not always how it goes. A lot of times, retail traders and investors are slow to cut their losers and quick to take profits. Sometimes, though, it works out for them really well, especially in a circumstance like this, where it was just such a brief sell-off before we had such a sharp recovery. So just crazy times. But I thought that was an interesting conversation that I had yesterday, and I wanted to share it with you guys. I don't know. Thought it was an interesting concept. The advantage of the retail trader, the advantage that we have is the ability to take calculated risk where many funds and the professionals out there cannot take those same risks. They have to de-risk. A lot of them especially get really bulled up at the worst possible times. And so they have to de-risk massively. Like if we were to see another event like this, guess what? Institutions, a lot of them are going to have to panic sell as well. Now, a lot of times they ride trends for a long time. So institutions might have made significant gains before that anyways. And so it's not like they blew up per se. A lot of funds are doing just fine. But in these moments where you get the quick panic selling, it can be an opportunity. If you think like we did on this channel, we talked over and over and over about how I thought that the downside was limited, but the upside was very strong. We ended up playing that really well. And I don't always get it right. And I've missed moves before, but this was an example of one that we played really, really well. Now that we're back to all-time highs, I'm already looking to essentially de-risk myself in a lot of ways. I've been selling covered calls. I've been taking some profits on some things. But it's a game. It's a game that repeats itself. And if you know how to play it, you can do really well. But most unfortunately are too scared to buy at the lows, and they're too greedy to wait for pullbacks. And that is a age-old story. Anyways, guys, up next, we've got Kenzo joining the call to take a look at the financials, the fundamentals, the overall story here of this market, and whether or not we are primed for some fresh all-time highs across the indices. Before we do that, let me just remind you that if you are interested in taking advantage of our biggest VIP discount all year long, if you would like to see the trades that I am taking when I take them, we are currently offering people who are watching this live stream 45% off our Signal service. So essentially, you can get notified with full details, images, screenshots, analysis, why each and every trade was taken. You can currently get access to that for 45% off. Let me just show you what this looks like. So if I take a trade, right, it will go directly, let me just pull this up, directly to your phone or to your desktop through the Discord app. A new trade comes with entries, exits, analysis behind the trade, a screen capture of the trade setup for myself. Oftentimes it includes fundamental analysis with the trade, why I'm taking it across the board. If this sounds like something you're like, you know what, actually that would be super beneficial to see what Nick is trading or the rest of our team is trading with context and important insights and educational value with each and every setup, then consider taking advantage of our biggest discount that we do all year long for VIP memberships of 45% off. We'll drop a link here in the chat. Here it is. Take advantage of the 45% off sale happening now, and it is ending very soon. So do not miss that. If you've been thinking about joining us, there is your chance. Up next, guys, we have Kenzo joining the call. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, and we're back with Kenzo. Hey, Kenzo, how are you?
I'm doing great. Thanks, and you, man?
I'm good. It's good to have you back on the show for what has been a pretty crazy couple weeks here. I'm very curious to hear your thoughts on everything that's been going on. We've had recently we had some inflation statistics. We heard from the Federal Reserve on Wednesday. We've had geopolitical stuff flaring up in the Middle East. What are your thoughts on these markets right now?
Yeah, I'm quite surprised because they seems to be quite strong. I was expecting some serious sell-off, but I think maybe it's because the US is not really involved in the conflicts at the moment, or let's say until now. But beside the geopolitics and stuff, on the economic events, I think things are going very smooth. We saw retail sales are going lower, which means inflation is going down. I think we're gonna have some maybe 2 rate cuts coming this year, which is gonna be good, and that obviously it's a good thing for the stock market.
Mm.
Unfortunately, with the conflicts, oil prices are just skyrocketing. That might have an effect on the inflation, which is not really good because we've been on this downtrend for quite some time now. But yeah, I think for now, so far so good. So far so good.
So in terms of where indices are, right? When we take a look at the S&P 500, you mentioned oil prices rising could cause some problems on the inflation side, but at the same time, we've had relatively strong earnings from U.S. major companies, and things look optimistic in terms of the inflation story looking backwards. Do you think it's more likely that we pause on the bullishness and see some downside in the coming month or so, or do you think we are poised for some fresh highs soon?
From my side, I think we're still gonna have some serious room to the upside. But
Mm.
the thing is, if maybe US get involved between Iran and Israel, I think that is not going to be good because that will actually lead to investors to think about safe haven. And the safe haven that we have is going to be gold, which is going to push very high. Maybe other currency pairs like CHF and maybe the other ones. On that, I think the market, if the US get involved directly, that is not going to be good. At even for the dollar, I think
Mm.
that is not going to be good. But at the moment, because they just talking, it's just uh, communication from social medias. It's not really that much. But if maybe Trump say no, we're going to get involved, that I think is going to crash. Not crashing, but I think the market can sell off.
Interesting. So do you think, I guess here's another question. So you mentioned gold potentially being a beneficiary to the geopolitical conflict and also maybe that cooling inflation story you mentioned as well. Do you, I like the upside for gold personally, if we can get some pullbacks. Do you think that, I guess if you had to choose, do you think there's more upside in the coming month for the Nasdaq, or would you choose gold? If you had to buy one over the other, which one would you choose, do you think?
I think I will go with Nasdaq
Hmm.
because at the moment gold is going up, or we can say it's influenced by politics or let's say tensions. But beside that, no one will feel like holding gold when there are other options which can grow very quick, or let's say growth stocks. So for now, yes, we can say gold can still go actually very high if maybe you are someone, or let's say investors from those countries which are involved in those tensions. Obviously, if we check their stock market now, I don't think they are performing very well. So which means there will be an alternative. You have to have alternative very quick. So if you are a neighboring country around those countries which are like fighting, all those investors, obviously, their stock market are not performing very well. So which means a safe haven is going to be gold or the other ones. So one way or another, I think gold can actually push up as long as the tensions keeps going higher or continues. I think we are still going to see some serious push from gold. But if they reach a quick conclusion and say, you know what, we reached the truth, 1, 2, 3, 1, 2, 3, I think that will make gold to sell off, even if maybe it's not going to be that aggressive, but we might see some sell offs here and there because we still have Russia and Ukraine still going on and stuff like that. So I think, but the one that we have now, it's mostly affecting oil, but still, even gold, it's enjoying that.
Yeah, definitely a winner here recently in all of the uncertainty that 2025 has brought. I mean, just as a reminder, indices are just barely on the positive for the year, and meanwhile, you take a look at gold in 2025 has been a serious winner, right? If you're talking about gold prices up 28% from the beginning of the year, it's been a massive winner here. The other one that's interesting to me is silver. Kenzo, do you ever trade silver? It's had a huge breakout here. What are your thoughts on this one?
Yeah, I did not really check it that much, but I saw most of the metals were pushing a little bit higher. Those countries which are involved in the wars and stuff like that, they really need those materials and stuff like that to produce whatever they want to produce. So, plus they are quite safe during times like this. Commodities are very good to invest in. So yeah, unfortunately, I did not really check that. I was focused on gold and other indices.
Sure. Yeah. And then another one that you mentioned, I want to get your thoughts on this one. This one's been the dollar, right? So the dollar here recently has been in 2025 to gold's benefit. The
Mm,
dollar has really struggled in 2025. We've seen a pretty dramatic from this recent high that was January 13th. The dollar index is sitting at a loss of about 10.3% year to date. It's
mm.
a pretty big move down. And we've seen a consistent kind of lower high, lower low pattern in the dollar index. I'm wondering what your thoughts are on the dollar here. What's making this so bearish? And do you think that the dollar bearishness trend with rate cuts coming and cooling economic data, do you think it can continue to push lower? Which obviously would assist with the gold rally. What are your thoughts on this?
Yeah, I think this is a little bit different from gold.
Mm.
I think since Trump was getting into office, he's been trying to say the dollar is quite stronger. It needs to go down. Powell needs to cut the rates. I think it's influenced. The influence comes from those politicians, and which at the same time I think it's a good thing because it was very high. It was not really very affordable, which means the rates were actually going up. I think this is a nice or a good sign for us to say we expect some rate cuts because at least I don't know if you said it's 10% from the top there going down. I think it's 8 or 10%. That is actually a very big move, especially within 6 months. So I think it's a good time maybe for Powell to cut the rate. That it actually puts a U.S. economy in a very good shape, actually. Unfortunately, we have this stuff going on beside that. But at the moment, I think this gives me confidence to say, yeah, I can actually buy stocks without looking back. I'm expecting some rate cuts from what we see because before, actually, Powell said, oh, the dollar is higher, 1, 2, 3. Now it's lower.
Mm.
So, which means there is a room to cut those rates because there won't be any sharp move or because already the market or the dollar at least lost some strength, and that is actually good for the rates.
Yeah, and I want to add one thing to the concept with the dollar index. You mentioned, obviously we have the geopolitical uncertainties happening in the Middle East right now. We've seen on a very small scale the dollar catch a slight bid in response to some of that due to the risk off kind of bias, where we do see the dollar sort of maintain some strength. We've seen, in initial onsets of like announcements of things happening, we've seen a drop in the euro dollar, drop in the pound dollar, drop in the Australian dollar, so signaling dollar
Mm,
strength. Here's my personal opinion on it. If you do get more spikes in the dollar due to that, I would actually personally take that as an opportunity to look for short opportunities uh, against that, right? So if for example we get um, things are uncertain for a little bit, worrisome in the Middle East, and people kind of flood into the dollar as a safe haven, I would take that as an opportunity to probably get short the dollar index. Specifically, some currency pairs that I like would probably be
mm,
shorting a rally in the dollar CAD, which we're starting to see. So if we get a bigger push to the upside on dollar CAD, that may be an area that I like. A pullback on the euro dollar for longs. Um, and I think that that's probably it. You mentioned the Swiss franc? Do you have any Swiss franc trades on or trades that you're considering?
Currently, no, but the market was still on a downtrend for quite some time now. So I was just waiting for another continuation because I think we had a support very close. So if that is broken, I will continue selling because at the moment things are not really looking good. You see that support? So if the market breaks that, I will continue selling. Or if maybe the market goes a little bit higher to that resistance, it's where I will look for another sell around those levels. But on the rates cards, I don't think if maybe there were no these tensions, I think this month was a very good time to cut the rates. But most likely they won't cut the rates if there are some instability. So they will just postpone that. But I think we're ready to see those rates cuts. So I think I'm confident that the market will still continue going lower.
Sure. Kenzo, what about the yen? The yen has been, of course, we're talking about the Swiss franc here. Do you have any yen pairs that you're watching? Euro yen, CAD yen, pound yen, anything that sticks out to you there?
Yeah, GBP, JPY. On my side, it was on a very bigger downtrend, but it seems to be on this resistance trying to break that. If maybe you shorten that, if you make your chart to be a little bit smaller, I think if you draw the resistance on top, to me it looks like a nice downtrend. But where we are now, the market is actually on a resistance. You can make your chart to be a little bit smaller so that you can see from the top there. No, you can zoom actually out so that it can become smaller.
Oh, smaller
Yes,
chart. Got it. Got it. Got it.
yes. So if you try to draw your resistance from where you draw your resistance, your horizontal resistance there, going a little bit down with the diagonal structure, I think it was a proper sort of a resistance going down.
Something like this.
So yes, perfect, perfect, something like that. So if just to confirm that, you can also draw the support on the bottom side, just to make sure that you can see that the same diagonal structure on the bottom side.
Yep.
Similar to the resistance, but on the down. Nope, quite similar. Make it parallel to the resistance.
Okay, like this guy.
Yes.
Gotcha.
Yes. So
Some
if you go back
long-term
there, you can
channels
see
here.
that.
Yeah.
Yeah, something like that. So to me, I saw it like that. So if it breaks, to me, I can say, okay, maybe JPY it's gaining some momentum, but it's a very strong resistance there. So we might see maybe some sort of a reversal.
Yeah, that's an interesting mapping that out, because if you do get the rejection here and you're bearish, that's a move here. Let me just map this out. That's a move of, potentially 1,200 pips to the downside or so. And if we do get a breakout here, something more decisive from this 196.10 level, that's about a 1,200 pip move higher. So we could be at kind of a decision point here. With the British pound against the Japanese yen, seeing which way we want to go. If indices rally, there is, in my view, a stronger probability that if indices do continue, that pound yen could continue also up to the upside, as typically the Japanese yen will sort of be sold in a risk-on environment and bought in a risk-off environment. So we'll see how all that stuff materializes with gold and everything else we talked about, as this currency pair will likely follow suit.
Exactly. Yeah, I think for now, if you check all these markets, we are on the decision phase. So we're just waiting for that last statement from maybe the President Trump or someone. And if we get that, it's where we're going to get these nice moves, whether it's a breakout or maybe respect. And if it respect that, obviously we're going to sell. If not, it means maybe we will see a nice breakout. And if that happens, maybe even on the other side, like indices, they will be trying to push the upside.
Yep. So we'll have to definitely keep an eye on all of that. Let's see. Any other? Well, actually, I guess here's another one that is a big topic right now: the price in oil. You mentioned it briefly earlier. Do you have any trades on this one, or would you place a trade on this one if certain, price action sets up?
Currently, no. Since we had that breakout there on my side, it was still inside our downtrend. So I had a buy exactly where you had a breakout. So I actually bought there going up. But if you squeeze your chart to be quite smaller, I had a very longer trend line, a resistant line on top, yes, something like that. So after that resistant down there, I bought the middle one, the green one, and the horizontal one there, exactly there. So we bought to that point where we have another resistance. So from there, I was still waiting because maybe the market might respect that resistance, the white one, the diagonal one that you have wrote there, the one on top, yes. There is a chance to respect that because we can see that for 2-3 days there, the market is struggling to break that. So maybe the market might start to respect that. But with the tensions, it's not easy to just jump in.
Yeah, I think when we look at oil prices, my bias here would be that they do seem a little bit overbought. But of course, overbought is only relative to what the fundamentals could bring next. Because if something, of course, escalates, we could see the breakout. But I think by default, path of least resistance for oil would be, in my view, to cool off a little bit from these levels, right? That long-term level of resistance, as you mentioned, but then also just the stretched kind of nature all at once. If we get any sort of geopolitical good news, meaning peace talks or negotiations or just a simple ceasefire or de-escalation, anything like that, and oil prices can very quickly shoot back lower as far as 64 very quickly. If you were to get like, okay, ceasefire deal done, then down to 64 we go. And I know that people, it's a very difficult circumstance and a high tension, high stress environment that we're sitting in. But surprisingly, the market has this crazy nature to like panic, freak out, and then deals get made even in the darkest hours. Right, it gets darkest before there's the sun comes out. So let's hope for some sort of negotiation or pause on what's happening there, in which case oil prices would likely shoot lower.
Yeah, I think I'm also expecting the same. I think maybe this might go crazy if Trump is not going to get involved. I think that is going to be good for oil. I think we will see some serious sell off because that is just a panic buy. It's not the same as gold. So I think that might be a quite aggressive sell off. Within maybe 2 days, the market might be back where it was, especially if we have some positive news from Trump. That will be, I think it's an opportunity. It's just an opportunity waiting there. It's better for us just to track the news or the post that they post on their socials, just to see what's really happening. I think oil will actually try to have some serious move from those statements that they're gonna try to put out there.
Yeah, we'll definitely have to see what comes with that. Last one to ask you about is Bitcoin and all this. It's still sitting near its all-time highs, around 105,000 here this morning. Do you still think Bitcoin has room to continue this year to the upside, or do you think it's maybe peaking out here? What are your thoughts on Bitcoin?
Yeah, I think this year it's actually maybe this year or next year. It's actually a good year or season for Bitcoin to shine. Even though we have these tensions and stuff, we still see it holding very strong. Plus, those countries like let's say Middle East, they use a lot of Bitcoin because they don't have most of these other payments like PayPal or the other ones. So it's actually their means of payments. So which means we can see a most or a lot of growth from that. But beside Middle East, I think this year it was going to be a very good year for crypto in general. And yeah, I'm expecting it to push even higher.
Do you own any? I think you own mostly altcoins right now. Is that right?
Yes, I'm just holding them, and yeah, they don't grow that fast.
Yeah, no, it's been a really kind of weird couple of years for altcoins. Like I use Dogecoin as kind of my proxy for a lot of the altcoins, which had a huge run up alongside of a lot of them during the kind of pre-election stuff, and then since then we've mostly had most of the altcoins calming off or calming down. So we'll see what happens with all that. I think personally for me, I like just keeping an eye on Bitcoin as a the placeholder for crypto. But if you do get sort of a next leg higher in Bitcoin, perhaps we could get that same juke of energy that we got for altcoins that we did in that same period pre-election. So we'll see. Crypto is of course a highly volatile area of the market with huge potential upside, but also huge potential downside.
Yeah, mostly let's say is actually the major one. So if it takes a certain direction, most likely the smaller ones they will also follow. So I'm also waiting for that, for those smaller cryptos to actually follow Bitcoin. I think one way or another they will. For now, we're still focusing on the politics or geopolitics or maybe AI, whatever. But once we bounce back, once we step back a little bit, we're still going to have crypto. So, which means I still see a very bigger room for them to grow. Also, Bitcoin to grow. So, yeah, I'm still very positive, by the way.
Yeah, no, it's we'll have to keep an eye on all of that. And Kenzo, I thank you for coming on the show here today, sharing your insights on all these different markets. Before I let you go, let me just mention to everybody who is joined here watching the stream, if you enjoyed the commentary from Kenzo, I look forward to it every week. And I would recommend that if you haven't already, go subscribe to Kenzo's YouTube channel. We'll drop the link here in the chat. If you click this link, it will take you to his channel, or you can just search up on your own device Extra Hot Forex as you see it on the screen there. Consider subscribing, checking out some of his content if you want more from him. Kenzo, thank you very much for coming on today.
Thank you very much, man, and also your viewers.
All right, we'll see you next time. Up next, guys, we will have Chris Pulver. He's not yet arrived, but I'm going to just take a lap back through everything here and see how things are going. I'm still, in terms of my own current positions, I'm long the Russell, which is going pretty well. I've got my stop trailed on this one. If markets plummet here, then I'll take profits on this trade that I've got for a small profit. And if we can get a push through these highs, then I will be looking to trail my stop loss further into profit from here. I also have a position on the DAX, which I think I'm still in the red on this one. Almost hit stop loss on this trade, but still in it, just in the red. We'll see if we can bounce back. Of course, took a hit alongside most risk assets due to the geopolitical tensions and the hawkish Fed that we saw. Yes, the hawkish Fed does impact other stock markets as well, simply because they tend to have some high correlation, and a strong US typically does trickle into other places like the DAX. So they do kind of move together. So we'll see how things materialize there. China's stock market had a little bit of a dip here as well. When we take a look at the dollar index here, still sitting completely flat, super boring here on the dollar. I'm looking to see if we do get some upside in the dollar for an opportunity to possibly look for short setups on it against specific currency pairs like the dollar CAD and the euro dollar on the long side. In terms of currencies currently on the EdgeFinder top setups page, I do like things like the euro dollar on the long side, CAD yen as well, but I already have a CAD Swiss position on, euro Aussie, euro yen, Swiss yen, Kiwi yen. I'm already bullish on Kiwi yen, or I already have a setup on Kiwi yen. If we flip the score around here, take a look at our bearish setups, what we can see here is Aussie Swiss, pound Kiwi. These are our two bearish setups currently on the EdgeFinder. Let me just pull up pound New Zealand just to see what's going on here. Yeah, so pound New Zealand, pretty choppy chart here for now. Not my favorite of the list, and a very big mover. So if you're a dollar cost averaging person, be very careful with currency pairs like pound New Zealand or euro New Zealand or euro Aussie. These currency pairs have very, very high average daily ranges. And so dollar cost averaging can be tricky on something like that because the position size can very easily be much larger than you thought it was. Guys, up next, we have Chris Pulver taking over the show. Just a quick reminder, if you want to try out the EdgeFinder for 30 days, we'll drop a link here in the chat to where you can find out some information on that. We do offer a 30-day trial. It is available. For more information, click the link being dropped in the chat to read about how you can go about taking on a 30-day period trial and what that entails. Click that link here. And up next, we got Chris Pulver. Stay tuned.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Friday. Welcome back. We have some pretty tight price action this morning, up a little bit, down a little bit. Watching some key levels right around that 6,000 handle. We have some big gamma levels this morning, just stuck right around that 6,000 handle. Going out to, I mentioned this 5,900, 5,905 level. That is the big JP Morgan support zone that I do think price can get to by the end of the month, especially if you break this 5,960 low, which hasn't happened yet, but we'll obviously watching price, today and into next week. I do have a trade on this morning that's centered, looking to see if I can just pull a little bit more time decay. And this is the low from last Friday. Do we, hold? This is the gap fill. And so far we held it. I did want to take a look at a price play today on Qs or SPY. I talked about this in one of my earlier sessions. Look, on the weekly time frame, we have two pretty big indecision candles. So let's go. I mean, we don't see a lot of indecision without volatility quickly coming later. So example being just in this last little bit, like those two candles followed by big volatility. There's two candles here followed by big volatility, a couple of candles here followed by big volatility. Makes sense. So I mean, this last like 1, 2, 3, 4, 5 weeks of price really hasn't done a lot. We haven't seen price do a whole lot in the market. That's okay. Like we're not necessarily turning lower, despite all the potential concerns out there. The market just doesn't seem to care that much until price suggests that it does. So just watching my levels pretty closely this morning. But this is coming into the day. I thought 6,000 would be an interesting spot to show some resistance. And it could also just show like this big magnet for the day where it just holds right around that 6,000 handle. So we'll see. Currency strength wise, what happened overnight? So we had FOMC Wednesday, markets. It was just currencies and futures yesterday. Things are pretty quiet today. Euro on top, pound on top, dollar catching a little bit of a bid, Aussie dropping, Swiss, New Zealand, yen, CAD, all to the downside. So euro up a little bit, dollar up slightly, pound up slightly. We had the Bank of England hold rates this week. That was on Thursday. So Bank of England held rates at 4.25. Swiss National Bank cut rates to 0%. I do wonder if their next stop is maybe going into negative interest rates. I don't know if they would. I don't know if that's necessary. I think that was a pretty big extreme, post COVID. But you never know. You never know. Negative interest rates maybe. Bank of Japan still holding at 0.5%. News today, pounded retail sales, CAD retail sales, low impact news, Philly Fed down slightly. Markets just don't seem to give a funyun. We're pretty sideways. So, all right, I want to price out something here on the Qs. So I'm just going to look at some levels. I think if we get to Qs, maybe get to highs around 541, that's $11, or get down to like 501. That's a lot. That's like $20 downside, maybe $10 upside. I'm curious if I can create an option trade that I'd like to play the next couple of weeks of. So let's see what this would cost. If I were to go to the July 18th expiration, Qs to the upside. If we're going to the upside, maybe a cheap trade to get up to 540. If I did like the 535 by 540, okay, it cost me 243 to make 257, or roughly 240 to make 260. Or think of it this way, it cost me $2.40 to make $5. Okay, so that's okay. To the downside, trading at 530, Do I think I'm going 5 wide there? Do I think like a 510? Maybe a 510 by 500? So for 393, I have a trade that potentially pays me $5 in the upside, or a trade that potentially pays me $10 on the downside. Let me see what this costs me if I go 5. Let's see here. Wow, that's a big jump. I was going to say just go closer, like $10. So I pay 6 to make 10. 6 to make 10. 6 to make 10. All right, let me price this trade out. So let's build this one out. I'll just throw it on the other screen first. This would be a inverse. Yep. So on SPY, let's go QQQ. Price this bad boy out. So if I bought the 60.35, expiration would be July 18th. 60.35 and 60.45. 510 put to the 500 put. Okay, let's see how nasty this one looks. So this would be the trade if I were to take it. There is a dead zone. Okay, there is a dead zone. So if price stays exactly where it is, there's a dead zone from around 540, which is the highs, to really 505, huh? I guess now that I see it that way, that dead zone's pretty big, because that means we'd have to get to we have to make a run. I mean, this gap is like a 490 gap. So if we fill that gap, I mean, that trade's pretty nice. But paying $6 to make 10, I mean, it's not quite a 1-to-1, which is kind of enough for me to say, like, that's not a good trade. Not a good trade. But I just kind of see us having limited upside. If anything, maybe melt up, test the highs, maybe look at a gap fill on just a bear put spread. I think I'm willing to kind of take that trade. So we'll see. But I'll keep an eye on it. Also had some more stocks pop up on my radar today for some setups. I'm going to add in and see if I have any new ones. Pepsi, I looked at AMCR, AMT, Toast, Dell, Schwab. FTNT is a new one. FTNT is a new one. COHR, I'm already in. OS, we priced out. CI, I think CI is a new one. ETR, ESI. ESI, AEP. Okay, some of these I've priced out. LAZ, is that Lazy Boy? Maybe. OPCH is new. GGG is new. Okay, there's a few new ones in here. All right, I'll take a little screenshot here and start getting some of these priced out. All right, let me check my sell trade this morning. Up around 20% on that daily profit play trade. Question is, are we going anywhere? So let me take this trade off the table. I think just to be safe, it's going to take a little tiny winner. Well, that turned quick. Was profit, now it's down. Come on, don't get too directional on me. What do we have? Rise in the day, I weekly gain. Really? Well, you're seeing that right here. This is where the week started. Right where my mouse is. This is the week starting. we are very close to turning this thing negative for the week if we don't hold around 59, 80 to 59.75. Take a look at levels again. There is some pretty big support around the 5,900 handle intraday if we are going to have a drop. But I'm curious if we end up getting stuck right around that 6,000 handle. All right, let's go a little top down, do some extra analysis. I'm just going to pull up a blank chart here. There we go. So just watching this area really carefully. I mean, are we going to break the structure, fall back down to some correctional areas? Are we going to try to wait or try to pop to the upside? Something like this, like just a little hesitation, a little bit more of a push and a melt up, trying to get back to all-time highs. July is a pretty bullish month. Maybe we get through this next week with maybe a pullback, and then we start to bounce up into the end of the month, into July being another bullish month for the market. Gold ripping. Well, we'll see. We'll see what Carr's definition of ripping is. I wouldn't call that ripping. Gold's actually flat on the day, unless you're looking at a very small time frame. I said this on the some of the sessions this week. I mean, to me, this is a support line. I think we're bouncing off like the 21 moving averages. So if I go gold here, take a look. Is that blank? Yes. Let me just add in a couple of indicators here. So EMA, let me add a couple more EMAs in here. 1, 2, 3. So I have the 200. Let's go 21. And we'll go 50. And we will go 100. Turn this 200 into a 144. There. So gold seems to be just holding this 21 moving average. So, I mean, pretty precise, like hit the 21, bouncing up a little bit. That's such a tiny little move on the daily time frame, but intraday seems pretty decent. Tick wise, that's up a little bit. I mean, if you got 33.43 to 33.67, it's not bad. Up around 25 points or so. That can pay well. All right, holding that low, holding the gap fill. See if we get back to center, back around the 6,000. I think the 6,000 handle is just going to be a big one today. One trade I might look at right now, SPX, today's expiration, maybe just 6,000. 59.05, there. I mean, I risk $100 to make 400 if I'm in between these levels. So between 59.95, 60 or 66.005. If it's in there for the entire day, I can keep some credit. Now, if I take the trade early, I don't want to hold it to expiration. Then I try to pull this trade in for about $14 and some change credit. And if I see it trading for $13.20, maybe $12.20, something like that. Not a bad trade. But intraday stuff can be a little tricky. All right, let's do a little bit more top down. So moving average, that's gold. I still think gold is going to be a bit of a grind. So if it grinds up to the highs, watch for that structure. Maybe gold heads lower. I still think a correction is due. I like to see the XAU spot price hit the 200 moving average, which I think that's the 144. Yep, I'll add one more exponential in here. So the 200 there. Make this one a little bit larger. Okay, so that's the moving average I think we get to before we end up making like significantly higher highs. I thought that gold either this year is going to go, just completely exponential melt up mode, and then we crash harder, or because we have such a long bar count that at best we're just going to keep slowly grinding, and then maybe have a pullback, find lows again, right? Let these moving averages catch up a little bit, have a good chance to buy support. Target 1 is getting back to the highs, and then target 2 is as high as you want to go. We can measure this out, but I mean, a round number at 4,000 would be a pretty nice target on gold, and then some. I mean, if I don't know, I'm curious. Moving forward, the next couple of years, if gold is really seen as just an awesome asset, and we get a lot of appreciation on it, that's very possible. Okay, so that's gold. Silver pulled back a little bit. Spot price silver was 37.36, pulled back. Silver's down 1.39 on the day. Last couple days, silver has pulled back around 5%. I've got a diagonal spread that is going to be the sell call side is expiring today at 34. So I'm likely going to add another, 30, 40, 60 day expiration right around this like 34 handle, and see if I can get a bit of price appreciation. Plus, I believe it's a $15 call. Let me check this SLV position here. SLV SPY, looking at GLD. So what? Oh, silver, so SLB. There it is. Diagonal spread. So I've got a 15 by 34. 1389 is my debit. I've been chipping away at this debit for the last 60 to 90 days. It's up about $1,250, but it's not going to get called away at 34. So the plan is to sell another leg at the $34, $35 call, see if I can collect a bit more premium, lower my cost basis by maybe another 40, 50 cents, and grab that income side. Also, if price is up above that, then I kind of max out my profit. Meanwhile, I'm still holding shares. I don't have silver covered anymore, although I mean, it's kind of tempting to get it covered, but I don't know. I'm like, I kind of wanted to appreciate. I think silver has, 20, 30% plus upside going into levels that we haven't seen in a while. But just taking a big measured move. Let's go weekly chart here. I mean, realistically, my goal on silver is like, let's get to all-time highs. Let's see if silver can get to $48. So, even with a bit of a pullback here, I'd love some silver up about 47%. I mean, if I had a stock that I was pretty confident could go 47%, I'd probably take that trade. So I do like silver. We can still have pullbacks. There's still plenty of support in here. Something like this, plenty of support. Parallel channel, maybe there's room to the upside for this thing to continue to cooperate. But if we, pull back in the near term, I think there's some good, strong levels to be buying. Try to keep your stop loss out of the way. See if this makes higher highs and higher lows. Okay, so that's a little silver action. Bitcoin 105. A lot of indecision here at the tops on Bitcoin. Daily time frame, a lot of chop suey. Weekly chart, even more so. What's the next big hurdle for Bitcoin? Well, indecision at all-time highs. Does this spell some volatility brewing? Maybe. If this is going to break up, do we keep going to all-time highs? Does this break down first and backfill some of these runs we've seen with this trend line break and consolidation break? Let's go to the daily chart. So I've talked about maybe a backfill in here. If we have pullbacks, and this is just range highs, resistance highs, support lows, chance to scoop up a little bit more, if we are lucky and still liking bullish Bitcoin, scoop up a little bit more. Profit target would be the highs, and then maybe you run higher. So if you, again, dollar cost average wise, I think Bitcoin looks pretty promising. What else? MicroStrategy, got a bunch of covered calls. Coin, what a rip on Coin. Was this a stablecoin thing? That had to be the stablecoin news, right? That was yesterday? What was this? That had to be Wednesday or Tuesday? Wednesday the 18th. Was this the stablecoin stuff? Passes the Genius Act, enabling non-banks to issue stablecoins. Got it. Yep. That was it. So big move from Coinbase. Got it. Ethereum. Still what looks to be a bull flag. Copper, I've got a level in here that I'm watching closely. German DAX. My fib. Plot and fib from low to high. Looking at a 30, 38, 50%. You know, if we're that generous pullback wise, maybe looking to buy the dip. I mean, don't be terribly surprised to see either the 23 or the 30% retracement levels get up to the highs. That's typically a shallow move, and stocks do that quite a bit. FTSE, we just failed to break the all-time highs. Kind of the same situation. Are we going to pull back for a dip that investors are looking to buy? Pull back 23, 30, 38%, maybe. Right? Is that the dip that's going to be bought? Argentina, maybe back to the 200 moving average. China was down this week, the last 3-4 days. Brazil, chart alarm hasn't gone off. Latin America hasn't gone off. Mags, not breaking highs. Maybe a bit of a rollover into this like 51 to 48 zone. Watching the S&P as well. If Mags rolls over, S&P is probably going with it. Yeah. Apple 198, pretty quiet. Amazon 210. Broadcom just off the highs. Google, fine, 171. Meta, pausing a little bit near the highs. Meta's had enough volatility. Maybe this, maybe a wedge. Maybe, I don't know if it's going to pull back that much, but find this U.S.-China trade agreement gap. That would, I don't know, to be a pretty good spot to be looking. Okay, if we come down and test, higher lows, maybe that's Meta. Maybe it doesn't hit all-time highs anytime soon, but if there's a higher low, maybe that's a good entry. Something to watch. Microsoft up to some fresh highs. Netflix just off all-time highs. Nvidia still creeping up here. Tesla 320 still watching. My cover calls in this one 280 and 250, 750. And I'm going to continue to roll those. Berkshire Hathaway right at the 200 moving average. Bonds down. That means yields must be up a little bit. 4.42 on the 10-year. 4.94 on the 20-year. 4.93 on the 30-year. Gold, yeah, we talked about gold just a little bit ago. Let's have a look. Gold is here. So dollar index. I'd mentioned try not to be suckered into selling the dollar at these lows. I thought this would be a bit of a bear trap. Seems to be the case. So dollar to me is more of a buy trade, at least for, I don't know, if we have a pullback here on dollar, maybe the 101 handle. If we pull back to like 100, 101, maybe back to 102. And likely that's maybe going to be met with some more resistance. So I would think the resistance support continues to play out a little bit in the dollar. Oil still pretty volatile. Gold, like I said, just bouncing off the 21-day moving average. If it holds, I mean, I think this has the chance to test the highs if we hold the 21 and try to get back to the highs. If we break lower, we get in between the 21. Well, that opens up room to drop to the 50. We break below the 50, we have room to drop to the 100. This is still kind of my big target. If I get a correction where we do pull back to the 200, then I'm going to take some puts. I have a 270 put on GLD, a 265 put or 260 put on GLD. Put in a hedge as well, just in case it gets a little nasty to the downside if the market just rolls over aggressively. But we'll see. and then silver. So gold holding the 21, silver pulling back to the 21. We kind of had an outperformance run on silver, where we went from 33 to 37. That was a pretty big pop on silver. So now any type of backfilling that we see, something like this, I'd like to see if we have a chance to buy some dips and still get into the 40s for profit. $48 on silver is my profit target. That would be retesting all-time highs. Okay, quick spot check here on a trade. All right, price is kind of testing lows again, down 20 bucks. Come on. 78, I got a 59.20. And I'm almost 60 points clear of this thing. Just upside down a little bit. Noisy day. Okay, what else? Gold, silver, dollar, oil, Bitcoin, Qs, SPY. You want to take a look at Dow? What's Dow and Russell doing? Dow's pulling back a little bit. I think this is still a good opportunity to be looking to buy some, or at least positioning for trades. I don't think the Dow necessarily comes back down below these options, or these April levels. So if we have the Dow, maybe this structure rolls over a little bit. This also might just be in a wedge. It might still wedge. But if it rolls over, we're breaking some fresh lows right now. SPX is breaking some fresh lows right now. Don't break too much. So fresh lows on the day. Coming back in, the week is now turned red. Is this going to run hard? I hope not. 5,900. Gosh, did we get there today? Guess I'll find out. So SPX trade. I might throw this on as a hedge. 5,900. This is going to be a put fly. This better be cheap. If I went 15 by, that's not bad. So for 30 to 40 cents, maybe. See if I get in here for 35 cents. We go 15 by 15. All right. I'm taking a little hedge trade on the day. In case we end up dropping down to like 5,900, it's just playing the gamma level. So down here, if we are going to roll below 6,000 and start pushing into this 5,900 zone, my goal is to take 35 cents, hopefully turn it into about $1 or better. And if it comes back and stays around 6,000, that's fine. It's just a 35-cent trade, but has pretty decent reward to risk. I mean, if I somehow get this thing spot on, then that trade can pay potentially, over $1,000. So high reward, low risk, kind of sprinkle it in the middle. So this will be more of a hedge fly. Let's group these together. What? There we go. Okay, so that's a bit of a hedge play in case prices get a little wild and crazy today. This one at 35 cents, I'm going to put in a close at around $1, maybe $1, maybe $1.50. Since I'm 15 wide, maybe get $1.50 on this one. All right, we'll see if price, finds some support here around this 59.20, 59.05. I'm telling you, just keep an eye on this 59.05. If price gives way, we break this little low from last Friday. That's around 59.62. If we break that low, mean, especially today, it's like, do we break the low and just fall? Do we test the level and then bounce? I don't know. It is an OPEX. There's like $6 trillion nominal expiration today. I think like 3.7 trillion was just in the SPX alone. So it's kind of a crazy day potentially in the afternoon. Any thoughts on Swiss? Yeah, so we'll take a look at currency strength for the day. Swiss was one of the weaker currency pairs. Now it's the New Zealand. The New Zealand's one of the weakest, and Swiss is right back at the zero line. Dollar's been getting a bit of a bid all morning. Euro and pound slightly fading off these highs. Aussie, yen at the lows. See what happens. Swiss pairs, I'm still looking. I mean, I like holding against the Swiss right now for positive swap. The Swiss instrument cut rates to 0%. So anything that I'm holding against the Swiss, including the Swiss yen, which I'm not trading the Swiss yen short, but if I'm holding Aussie, Swiss long, CAD, Swiss long, Euro, Swiss long, Pound, Swiss long, New Zealand, Swiss long, Dollar, Swiss long, we're still getting some decent swap in that one, anywhere from like 2 to 4%. Dollar Swiss, I believe, is still like 4.25%, 4.5% of hold. So I'm just kind of patiently waiting to see if we get some bottoming formations. I do wonder if the gold trade has to go south, if gold turns a little bit bearish, or at least corrects back to the 200 moving average, if that turns the Swiss a little bit. COT, I do, but not a ton. Not a ton. COT is it's a lot of, I don't know. I mean, some traders love it. Some traders love, commitment to traders. I think it's good for a bit of contrarian. Like if you see that the retail side is very one-sided, especially when here's where COT is really good. Okay, let's say that the market has been trending higher, 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 and all you see in the COT report is that retail traders are still very, very bearish, right? If they're very bearish and this market's been trending higher, the COT to me is a contrarian play, which tells me that this market may still go higher to flush out and bring the pain into all those retail traders until they are stopped out. Then we start to see price reverse. So that's roughly how I would use it, is if we have a very crowded trade, one way or the other, and the market is going up and everyone's starting to position short and just like load in to maybe a 70% plus bias. I think there's always that pain trade play, especially in currencies. So that's how you get flash crashes, right? You get a move like this where everyone is short. Let me delete this. So you go move is up, everyone's short, 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 and the market just goes up and then flushes them all out, and then it comes back in and reverses. And afterwards, they're like, what the heck? I got the direction right, but I got stopped out. Well, yeah, because it was just a crowded trade. So I had to run, kind of flush everyone, make them feel the pain. And then when that liquidity is gone and, stops are all hunted, sweep the highs, whatever it is, then it reverses. All right. Keep an eye on this today. All right. What else do we want to take a look at? Individual currencies. Take a look at individual currencies you want. Aussie, Swiss. This is a weekly. Let's go daily. I'll go here. Aussie, Swiss. So this is what I'm looking for some of the Swiss crosses. We have this low, we have this high. If this is a pullback, a chance to accumulate, I'd like to see if we can get back to this 200 moving average and maybe all of this support. So, 5,500, 5,550, 5,500 to 5,550 zone. It might take longer. I mean, honestly, this trade might still want to just grind lower, grind lower, grind lower, grind lower. Maybe it's a double bottom. We come back up to the highs, hold this move, and then we double that, right? Like that would be a measure move of maybe like the 58 to 5,900 zone. Big difference. Okay, are we going to breach these lows? We're at 59.68. Lows from last Friday, 59.62. Okay, this is kind of the make or break for the week. If we hold this low, okay, fine. If we break this low, look out below. It's a good quote, huh? You break this low, look out below. Keep an eye on it. It's not that far away. This is why I said the 5,900, 5,905 level is so key. It's right there. Like you can see it on the chart. There's like 30 to 40,000 contracts at 5,905. Pound New Zealand. Sure, we'll take a look at that one. Pound New Zealand. And let's have a quick peek here. I'm just going to check on a couple of trades that I've got running. So this one's now showing some profit. Oops. Okay, so I'm down 60 for my morning sesh. Looking to see if this one will actually hedge that out a little bit. Hopefully. Be close. Okay. So 59.62, really, really key level. See if it holds. Pound New Zealand. So Pound New Zealand, I looked at this. So we had our high, low. We are using this support level. I mean, I'm late to the trade, but that would have been my play. If this low holds, kind of a small like dollar cost averaging where it's like you can buy lows, maybe use the 200 moving average, trade one, trade two, stop loss lower. It's already made that 2-day pop. So, coming back up to the highs again, that's kind of all I would expect was holding this low, maybe hitting this midpoint, and we come back up into like 2.28 or so. There could be a little bit left to go if you want to look at scalping potentially on the smaller time frames. All right, what are the currency pairs? Anything stock wise, any symbols, any tickers, any charts? German 30. Um, Overbought with a little pullback. I mean, just to keep this really, really simple. If you, I mean, I do think the Eurozone, as long as we have a stable US, I think the Eurozone does pretty well. If you're buying small, this would be area one, looking to get a little bit more of a dollar cost average position at the lower moving averages, so like the 144, the 200. So I mean, I would still plan on fresh highs for the DAX, and yeah, I mean, I'd still plan on that. So either shallow pullback, small trade, pull back a little bit more, dollar cost averaging a little bit more. And from there, I mean, if it hits highs from here, that's a fine trade for a little scalp to the upside. And if it is going to pull back lower, scalp it up to the highs again, to me that's a pretty good looking trade. Let the trend run, All right. 64 key level here at 59.62. That is last Friday's low. We're about to see. Maybe there's a little bounce off of 59.50, but there's not much. I'm seeing this level of 5,900 light up for the morning. I was kind of hoping that this would be a little bit larger. So it was decent at 59.55. Wow. So this 5,900 handle is lightened up a little bit. Okay, let's see if 59.50 is going to be a support level. Otherwise, this is going to test my put side just a little bit. That butterfly spread that I have will help me kind of mitigate some of the risk. So, maybe I'm down $100 here, but I'm up $100 on my butterfly. I can wash it and survive. Let's go Eli Lilly. That was the request. So here, Eli Lilly pulling back. I don't mind this one. I tried to price out a trade last week on Eli Lilly. I just thought, man, if we get back to these lows, like these lows right here, I wouldn't mind looking to see, okay, we're revisiting April lows, going out of the money, maybe just a simple credit spread, maybe a ratio spread. It's just a really expensive stock. I mean, it's $760 right now. Does it fall much lower than 720? I don't know, maybe 700. But I think fundamentally we're talking like $1,200, $1,300 fair market value based on discounted cash flow model. I think as long as people are still taking Ozempic, Eli Lilly is going to do fine, which is probably a big thing. Okay, CVX and Hood. CVX will be Chevron. So to me, this was a trade you're buying support. I like the lows on Chevron and trying to get back up into range highs. So if you're buying the 145 handle, it's trading up to 148, 149 right now, but price target at like 175 to 180, somewhere there. And we go a little bit higher. What else? Euro dollar Hood. Robinhood at 76.33. I think a ratio spread all the way down here into the 40s. Let me double check that really quickly. So 37 by 35 ratio spread. And I mean, that's one way I'm just taking advantage of. It's like, I'm not going to chase this thing. I'm not buying this thing at the highs. If it goes higher, awesome. I'll just make income on the ratio spread. But what a run, So for me, it's trying to get, if we're going to own the shares, it's like own it as cheap as possible. Own it down here with a nice gap fill. Own it down here at the big dynamic support levels. This is why I don't chase highs. This is why I trade options. It's like I can still make income on the trade. This would pay me about $200. So $200 with a max profit of around $400, almost $500, if it's somewhere between 37 and 35 by the end of expiration. But if it just goes higher, it's $200 winner. Okay. All right. Oracle, ORCL. I mean, I think after this huge pop post earnings, again, maybe just a volatility. I mean, honestly, I think this better trade is we rip up here, you sell volatility, maybe an iron condor. And I'm not sure what the width is, but if it was, 15, 20 delta on the call side, 15, 20 delta on the put side, see if price just stalls essentially after earnings, or just wait for a pullback. I mean, if this goes pull back into these areas here, pull back, and then back to the highs, I mean, that'd be a great spot to consider participating since it blew through these recent highs. So, yeah, I mean, if you're wanting to chase, it's like don't chase the highs. Pull back to 190, maybe gap fill at 180, and look at a bull put spread, bull call spread, something like that. Pretty simple. Just be patient. I think don't chase the highs. IAG and Lululemon. Lululemon continues to get smoked. I've got a pretty low ratio spread on Lululemon. Right here, 160 by 155. It's still down a little bit, about $250. Max profit's about $200 on the credit side. I do have a $5 wide ratio spread, so potentially, if we went all the way down to like 155, 156, I could get a bonus trap of maybe $5 and take that in, and also have the $2 credit. So most likely the profit trade is going to be about $2. But that potential keep of maybe $6 or $7. Okay, again, flirting with the low, flirting with that Friday low at 59.62. Chart alarm's going off right now. So the question is, are we going to just tag that chart alarm and go anywhere, or are we going to just tag the chart alarm and bounce? So we tagging to go further, we tagging to bounce. It's next on the to do to watch. Boston Lululemon. Okay, I mean that's fine. I wouldn't be super stoked unless you're. I mean, again, this is maybe a stock for dollar cost averaging purposes. How low can it go? I don't know. I mean, we're at 227. Could we drop down to 200? Could we drop down to 160? Why did I do the ratio spread that I did? Because it would be pretty much the COVID lows. The COVID lows. That is my ratio spread. So 160 by 155, and the COVID lows is I guess I'm a little higher than that, 128, 160. So I'd own the shares around 148. 148, lows, the COVID lows are 130. It's not too far off considering the stock would be down just a ton. If I'm assigned on this stock in any way, shape, or form, break even is 145, and the stock would be down 72%. I mean, I'd like to take some ownership of something at 72% if I believe the company fundamentally is strong enough, and I think it is. I think that it is. There. I mean, Snowflake wise, pretty good. Rose, good earnings. Not terribly expensive price to earnings. Fair value, nearly $300. So yeah, I mean, it does have potential. It's not super expensive compared to other retailers. So just be aware. A lot of stuff can happen. But the trade that I put on as this was falling was a ratio spread. Stay out of the way. Okay, a couple of ones here. So Lululemon, yes. Ozempic, I was just talking about Eli Lilly. IAG, I haven't seen that one. IAG, $7.31. I am Gold Corp. I don't even know what this one is. What are you trying to accomplish here on IAG? What is this? Development, production, gold, mineral resource, properties, owns and operates. Is this a miner? Owns and operates Westwood Mine in Quebec. Development project located in Ontario. Operates. Yeah, I don't really like I don't like miners as far as like silver miners, gold miners, senior, junior miners. I mean, I think that the best trade of this year would have been the catch-up trade on GDX. Gold, like GLD and spot gold were ripping to the upside, and this was still way, way, way behind. And all of a sudden, we just had this monster catch-up trade. So GDX up 64%, and just played along nicely with the trend. So from lows at 26, pull back into the same area, from really 37 to $52, $53. It's a pretty good run. Oh, you're talking IAG, International Consolidated Airlines. Oh, well, I stand corrected. There it is. Well, that's different. And this is a stock that trades for $4. I don't know. Is it liquid? Is this a UK stock? Looks like it. Airlines are tough. I unfortunately have shares of JetBlue. They have not been good. I was thinking the JetBlue Spirit merger was going to happen at some point, give that thing a squeeze. It never happened. I'm sitting on just crap shares there. Delta was up a ton last year. SkyWest was up a ton last year. They all fell aggressively. That was with, I don't remember if that was like a Boeing debacle or when Trump got a plane from Qatar. I don't remember why the stocks fell so hard. Or it was all the FAA things that were happening. I really don't remember. They dropped like 40, 50% very quickly. Come on. But anyway, I personally, I'm steering clear of airline stuff. I mean, it's cheap. It's only $4. Does it go anywhere? Maybe. I mean, if I had a chart alarm here at like maybe $2, $1.50, maybe. Right? I don't know. Not something I want to chase. Any chance? Glenn, you binged it? Nice, man. Big shout out for Glenn for picking up little practical options. There you go. Very nice. Ken saying, any chance the price for the Euro Aussie become bearish? Let's take a look. Euro Aussie. I wouldn't get if you're thinking bigger time frames, I would just look at something like that. I mean, with this high, I mean, what did this thing do? We rip up, we pause, we rip up, we pull all the way back. I mean, it just seems like a slow, steady move up. Where if you're looking at current price, you're following current alignments. The trade, in my opinion, on Euro Aussie would be you're buying low. As long as we don't take out this trend line, then we're possibly coming back into. I mean, there is some structure here, but if we breach this high, I mean, this market can drift up into like 1.80. So like I said, as long as we don't break this trend line, I think this has potential to keep creeping higher. 1.80, maybe a little bit more, but there's a lot of structure there. So shorter time frame alignments. I mean, daily to me looks like it's up. We've been up since the bottom in April here, April, May. But if we go, higher lows, higher highs, maybe get up into the 1.80 level. So it's about 85 pips higher. Yep. So I don't see super bearish yet. If I was looking to get bearish in this, Ken, it'd probably have to be up here. If I'm going to get bearish, it'd have to be up here. Okay. Or I showed the trend line. Like it has to just kind of clearly break that trend line, which I wouldn't force that trade. If I'm looking to sell it, I want some shorter term confirmation, maybe even wait for just bigger resistance. Okay, quick spot check on the day. Is my daily profit play doing a little bit better? Maybe it's back to break even or so. Okay, son of a biscuit, man, down $60. Let's go, come on. So I'm still 45 cents off of this level from a threat, but I'm still down $60 on the trade. I'd like to see one of these pay. Either this trade pays, this one would take a small loss, so I still net positive on the day. Maybe I don't know. I'm not ready to close this one yet. So if I keep this one open for at least a break even or better, this one might be a small loss. If this one pays me, I could take a manageable loss. This one would hedge it out, try to go, flat in the day without taking too big of a whack. So I'm going to go ahead and set a chart alarm at 59.20 just in case. And again, as I mentioned, like that 59.62 handle right here, it's like the low is being tested. We did just squeak out a fresh low of the week. We are taking out low from last week. Unless that is a poke and the market's going to come back and hold it like that 6,000 handle, that would just kind of be the calm before the storm as this market potentially rolls over on itself. But we just have to meet, we have to break the lows. So I'm not saying that I want it to. I'm saying that technically it makes sense that we do break the lows. We do have a little bit of a slide, but unfortunately, the market's not going to be, it's not going to be good when the market falls because it's going to increase volatility a lot. We've watched the SPY, or not the SPY, the VIX. We've watched the VIX, get back into the 20s. I mean, this is a pretty elevated volatility. Most of the time we've seen the VIX, in these like bull markets, we've seen the VIX in like the teens, like 13, 14, 15. So a 20 VIX can kind of quickly become like a 25 VIX. And that does scare. That does scare a lot because that's way bigger movements, maybe intraday. Markets caught off guard a lot of times if we're going to have a big jump up in volatility. So just something to be mindful of as we come into the next couple trading days, and then on Monday the 30th is going to be end of month and a quarter. All right. So that being said, I just got a couple things to monitor on my end. Got some scans I want to take out in price. I got some expirations I need to tend to, but for Friday, I'll take Andreas's final request here. LMT. Let's Let's have a look. Lockheed Martin. I mean, outside of the trade being super expensive, I don't think it's a bad trade. I would just want to have a stop loss, kind of below these recent lows. So is it going to go break into this level, work its way up? Maybe. This is more like in the defense space. If you're kind of pro risk off, maybe pro geopolitical escalated tensions, then Lockheed should be okay. It's just an expensive stock, dollar cost average maybe, but not a super favorite of mine. Let's go LMT here. And I mean, again, snowflake wise, checks a lot of boxes. Not terribly expensive. 20 times price to earnings. Fair value 628. I mean, look at some of these are like household defensive plays, right? Lockheed Martin, Northrop, and General Dynamics. Like price to earnings are all pretty similar on each one. I mean, technically it looks okay. I just want to have stop losses. If I was buying it, buy here and maybe buy here. I wouldn't give the market too much more room than that. If it goes higher, great. It's upside. Would I hold it to all-time highs? Not really. I would just, I don't know, maybe if this is a range trade, measure the box and get up to, 1-to-1, something along those lines. Okay. All right. Couple more things here. Still down on DPP. That's annoying. That really, like, how's that? Yeah, I guess we are 20 points off center-ish, so I get it. Fine. Okay. That'll do it for today. Happy Friday. Have a good rest of the day. And let's come back and do it next week. All right. Thanks, everybody. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.